This week, we're talking all things tech investing as we get results from some of the biggest names in the sector, one of which is Meta Platforms, making its next AI play by announcing an app meant to rival here ChatGPT and other assistant competitors like Claude and Gemini. And so we want to dig into one of Wall Street's hottest trades, artificial intelligence. Here with us, we've got Kimberly Forrest, who is the Bokeh Capital Partners founder and Chief Investment Officer. Kimberly, good to have you back here with us. Today we're talking about how investors should think about investing in AI. I'd love to just start with your overall thesis here for picking companies.
Sure. Well, I come to this industry from software engineering where I was doing AI. Can you believe the luck of that, right? So today is your lucky day. But regardless, I started in the industry in '99 where .coms were a craze. I did not fall for them because I had worked in software, and I'm looking at them going, I don't really get it. This company doesn't have a product, or this company is years away from delivering the product. So I have a very practical approach to looking at and evaluating technology. The first thing I ask is, what problem is this technology solving? And then at what price can it be delivered? And if that price is higher than the product or than the problem that it's being solved, I take a pass on it, and that might hurt, like in the short term, but you're going to be right in the long term. So that's what I'm doing, is I'm evaluating all this new AI stuff, saying, what problem does it solve and what's the price to deliver it?
Yeah, no, that's really brilliant. So as we're thinking about the investing and the different buckets, there are kind of three main buckets of generative AI investing. And, you know, I kind of harken back to what we had heard from Mark Zuckerberg many moons ago. I think it was about 2 years ago, essentially, when he was laying out the vision for what their own investments would look like. And he kind of laid out the investment thesis as well in the buckets, applications. Those are the products that people get to use, like ChatGPT and Microsoft Copilot. There's also learning models, the so-called engine under Gen AI applications, such as ChatGPT-4 or GPT-4 rather, which powers ChatGPT. And then there's the chip makers that all of this sits on top of, and the data centers like NVIDIA and Taiwan Semi. So break down how you think about investing in each of these buckets, and perhaps we start off with applications where consumers are touching it.
Sure. Well, I think it's important to note that most of the stuff that we're doing is a replacement for search engines. And there's a good reason for that. People who want to use a search engine want to get an answer to a question, not kind of figure out what the sentence should be to the computer and then scroll through all of the links that come back as potential answers. So at the face, ChatGPT lets you ask a question and it gives you an answer. Now, how much are you paying for that? You might be paying the $20 a month or whatever to get premium service, but I'm thinking that is way, way under what it costs to deliver that service. So in the long run, either the price of computing has to come way down, or the price of accessing that has to come way up. The other thing is, if you're an investor in Google, you really have to watch this because, you know, ChatGPT and friends are eating Google's lunch. So that's one thing. I think playing the semiconductor layer is really smart because we don't really know what the end application is going to end up at, what problem it's really solving, because there's a lot of problems. But we know that it's going to be delivered on a chip. So that's been an area that I've been playing for the last, well, we'll say 6 years, not necessarily in reaction to AI, but there hasn't been a whole lot of compelling software companies to invest in that were solving good problems in my paradigm, where there's a clear problem, there's a clear solution, and it costs less than the problem.
Okay, and so the companies that are best positioned, who are your top picks and why?
So I'm going to concentrate on the semiconductors, and this is kind of weird. I love Micron. Micron is a weird, it's not really a semiconductor company. They're more in the area of memory. But they have been able to come up with fast memory that NVIDIA is using on their chips. And I'm thinking whoever is NVIDIA's competitor is going to be forced to use it's called DRAM. We're nerding out right now, but DRAM is really important for these chips that are doing the AI processing. So we like them. The second way to play this is software that designs chips. And we like Synopsys. And they are buying a favorite local company of ours called Ansys, which does engineering simulation where you can, test out, do online prototyping instead of physical prototyping. And they do have a lot in the electronic design automation space as well, which is why Synopsys is buying them. But anyhow, so we like that company, Synopsys and Micron, and they're not necessarily directly in the line of fire, but I think a lot of whoever wins in the AI chip race might use their products.
Fortunately, Kimberly, our viewers are looking for that deep analysis that you just provided, so nerding out, totally kosher. Thanks so much for taking the time here with us.